What's up, everyone? Welcome back to the 5ers Live Trading Room with me, Jonatan Randin, and my co-host Victor. Hope you guys are having a wonderful Tuesday in the markets, and I hope everyone's very, very profitable today. What's up, Malcolm? It's a previous giveaway winner. On that note, I just all the giveaway, everyone who won a giveaway account, it's in the process of being sent out. You should have it probably later today. Everyone should have all their hub credits and their hub account.
Hello, everyone. We are starting our new show. I'm very excited. I hope you are too. We have a lot in store for you, as always. Authentic traders showing you how we trade. So, to me, that already is, a bombshell. To be able to
Yeah,
watch
bombshell.
a
That's the right word right there.
All right. To me, it's watching anyone who is actually funded and trading, talking you through the market is so valuable. Even if it's
Definitely.
it's not very common, you can see that because it's simply very difficult. But we are here to help you, here to guide you, and to have fun in the process. So let's hop on.
All right, guys. So, yeah, if you do have any questions, let us know in the comments. So, with any questions you have, any help you need in your trading journey, let us know in the comments. We are here to help. As Victor said, we're happy to help you out on any specific concerns that you might have with trading. I've been having some feedback in some not feedback, but some suggestions. From a couple of viewers actually that they want us to talk a little bit about trading psychology, more about trading psychology, which I'm definitely interested in that. Now, of course, I wouldn't say that I'm an expert at psychology, but I do know a thing or two when it comes to trading psychology. Like everyone who's every professional trader should know a thing or two with. When it comes to trading psychology. And I think it's good to hear from both of our perspective how we deal with things like fear, greed, FOMO. We all struggle with that from time to time. I mean, my biggest one of my biggest issues is. As you guys know, if you've been following us for a while, you know that I tend to exit my winners a little bit too early. And I mean, we looked at that exit analysis graph we had up on Edgewonk, where you see that I exit my winners a little bit too early. If I just let them win, they would have hit that original TP. Speaking of Edgewonk, next week we're going to have Ralph on. We're going to talk about the Edgewonk journal. We're going to talk about trading journaling, journaling your trades, all the important stuff when it comes to that. Yeah, so Kalu says he's struggling with psychology, but when it comes to trading psychology, it's good to think about in what specific scenarios are the trouble or are the problems appearing, like what's happening in detail. So the more details that you give us, the more help we can give you, the more specialized and more better help we can give. So for example, maybe and this is also, this is where journaling comes in, also very important. Imagine that imagine that you have a journal, and you write in that journal, you're tracking your trades, and you're tracking maybe um, um, you know you're tracking your sleep quality, for example. And you see that, I know a lot of people don't do this, but it's actually very important to do track stuff like that. So imagine if you wake up and you feel like today's not a trading day. Like I said that yesterday, right? I said, I don't feel like trading. I don't feel like I don't have a good read on the market. I don't want to be trading today. And I didn't trade, right? And I know days when I'm trading anyway, at that point I can pinpoint like what the problem is, not sticking to that plan of not trading when tired and things like that. So trading psychology and trade journaling goes hand in hand, so if you are struggling with trading psychology, I would highly recommend that you start journaling. You journal your thoughts, journal your actions, and you're probably going to see that the solutions to your problem is going to be in the words that you write in that journal.
Sure. I by coincidence, although it's not a coincidence because we talk about this quite often, but coincidentally, yesterday I discussed at great length. We dedicated basically the whole live stream, the workshop we had. We talked and discussed different aspects of the mindset and the psychology in our Discord workshop. That's an invitation right there for everyone who isn't member yet of our Discord community. Come join us, because if you like what we talk about in our YouTube's live stream, you will love what we do in the workshop, because we can go into much more detail. We can have much more interaction since the group is a little bit smaller. But it is it, and it's yesterday we talked about psychology a lot. So I think it's a great subject, because we all need to have that third pillar of trading well cemented, well constructed, in order for you to be successful. If you have if you're missing one of the three pillars, I mean, your house is going to come down sooner or later. So it's a great topic, a broad one, by the way, but a very necessary one to discuss, you know, regularly.
Yeah, definitely. I think the best way to do it is having people in the comments say, I've got some issues with this, I got some problems with this. A lot of people are asking about the code for the giveaway right now. I will disclose the code for the giveaway when we get 200 likes. So yeah, it's all about the likes today. You want to make sure that you hit that like button. If you don't get 200 likes, there's not going to be any giveaway. And we're going to give away 2 accounts today if we do hit that 200 mark, 20K bootcamp accounts. If we don't reach 200 likes, but I do feel, I mean, maybe we'll reach 150, 175, and I feel like the quality of the comments and the questions and the engagement in the in the comment section is good, then we might consider doing a giveaway anyway. Cleaning
We
up,
have
just cleaning up the chat here a little bit.
great people in the
All right,
audience,
Henry.
Henry and Haresh. We have a lot of people who come frequently, if not every day, with us. So we enjoy having you guys. And it gives us great pleasure to see the same, that you guys are enjoying it and joining us, almost every day, if not every session. So thank you for that. Thank you for that appreciation.
Yeah. Give me a second here.
No problem. Would you would you like me to
Yeah, we have there's a
new
couple
or
things I
some
want to.
other?
Is there a lag?
Let me
Maybe.
say something. No, I don't see
Yeah.
any lags between you
Okay.
and I.
Perfect. What's a wick fill? Can we what's a wick fill? How do you explain how to read a wick fill? I don't really get that. So if you could
I don't
maybe
either.
specify
I'm
that
not sure.
questions, and we could help you with that. What is, let's say, Martingale? Do you know? Do you know about Martingale?
Yes.
What is it? Is it not a risk management strategy, or like it's a way to enter positions, right? You scale into
No,
positions.
no. Martingale is, let me put it a nice way. It is, um, the concept is a little bit dangerous to implement. There are ways you can use it. Well, let me tell you what it is first. The Martingale is a betting system, right? That has its origins in the casino business, where the gambler, right? You see already where I'm going with this. The gambler on each loss doubles his or her bet, and sooner or later you will have a winner. And when you get that winner, you win, of course, what you lost, with a little bit of little bit of profit. And this Martingale works perfect, right? Because you sooner or later you will get a winner. But the problem is that your capital isn't limitless, and sooner or later you will hit that, you will blow up. So it's the pure martingale system where you double your next bet on whenever you after a loss, is a very, very risky proposition or way to approach trading. Trading isn't about increasing your risk, and martingale is exactly that. um, that's the basic thing about martingale. So it's a betting system that has that was, it's a gambler's way of dealing with the odds against you, basically. But um, there are things which are similar that, are used in a responsible way, that have some elements of the martingale system in trading. um, and those are not necessarily, if you know your risk and you limit the risk, then you can use, a little bit of that in a trading system. But typically martingale is not something you want to be studying or applying, because it's it's very dangerous if you don't know what you're doing.
Yeah, so I think why that's what I'm wondering. Why are people in trading interested in this? Because everyone I've asked about Martingale, they're like, yeah, that's not going to work. Like I've never like have we seen a professional trader actually seriously talk about Martingale or are we all only seeing like influencers on YouTube doing videos on this subject? Because as far as I understand, I haven't heard Martingale being used in the professional trading space. I might be completely wrong though.
No, it isn't. But the thing is, martingale isn't a strategy in the sense that it has edge. It doesn't have any edge, right? It's a way to manage your, not manage, I would say mismanage your risk. But it's a risk management tool, a very bad one, by the way. But it's in the category, it's not the strategy. So martingale in itself will not give you any edge. So, and when
Right.
you
Okay.
start, when you're trading, when you're building your system, if you don't have any edge, you already, you have no chance in the market. Sooner or later the market will wipe you out. So you can use the most sophisticated risk management. It's not going to help you if you don't have an edge, right? The risk management in itself will not create an edge. It can amplify it, it can mitigate risk, and in that sense it can be an edge. But it doesn't create an edge where there isn't none, there isn't any. So it's the same thing with psychology. You can be, the best mindset master of the world, but if your system doesn't have an edge, you will still not win in the trading space. So martingale in itself isn't the solution. You need to have an actual system, an actual validated strategy that has edge, and martingale isn't a substitute for that. And the problem is with martingale that it is very enticing, because the thing is, you will have small losses, all small winners, very, very frequently. So you can create with a martingale a system that has 99% winning rate. And it looks, if you look at an equity curve, it looks like a straight line, if only considering the close position, a straight line, almost perfect. And that's very enticing. But the problem is that there is a huge risk, a time bomb below that equity curve, that once you get into those losing streak, and since you're doubling each time, you have the power of, compounding and multiplication against you. Once you have those rare events, but they will happen, whether that be a couple of days, that a couple of weeks, a couple of months, it will come. And when it hits you, it blows everything that you accumulated, all the profits, and that you had, and the rest of the account, basically. I mean,
I
martingale
have
is a
a,
bad idea.
Here's a comment here, Alfred. So when it comes to the giveaways here, right? So I'm not sure where you sent me a message, but you get to understand on Twitter, I'm getting a lot of messages every day, and I just honestly I don't have the time to go through all the messages. On Discord, I've simply given up. Okay, so if you send me a message on Discord, I'm not going to see that because I'm getting hundreds and hundreds of messages every day, and most of them are scams, and they're not coming into my inbox. You can, however, reach out to me. I'm going to give the the email. I'm probably going to be very sorry for giving this out, but it's my name.r@the5ers.com. If you do have any questions about the giveaways or the trading room, you're free to reach out to me directly on email, jonatan.r@the5ers.com. When it comes to the giveaways, the best place to reach out is the comment section here during the live streams on YouTube. Please do not reach out to support. I've had people from support reaching out to me asking me about the giveaways, because people who want an account, they go to support on the website. That's not the right place. If you want a giveaway, within 1 week, you will be credited to your hub account. Your hub account will be credited with credits so you can use towards an evaluation account. And I'm the only person to reach out to when it comes to this. So you can reach out to my email, or you simply ask me during these streaming. Yeah, Alfred, you're getting an account. You're one of the winners, so you will get an account.
Is that the Alfred that won?
Yes. Well, the Alfred that won is getting credits to the email that he used to sign up. If you're not the Alfred, then you're not getting any credits. But if you are the person who owns the email to that account on Gleam, then you will see that your account will be credited in probably to later today. I think I think we can drop the whole subject of Martingale and get into actual trading. I want to ask you guys something. Let's play a game. Everyone
Who doesn't like a game?
watching here, yeah, everyone who's watching here. And by the way, guys, let us make sure that you hit the like, because without the likes, there's not going to be any giveaways. And subscribe to the channel. And we got some good stuff going on coming up soon. We have some major events coming up for the YouTube channel. It's going to be very, very cool. Okay, so you look at CAD JPY, right? This is an uptrend. So you have here, got a up move, and then it bounced as support, sort of a breakout, bounces on some type of support, then it get a breakout. Where, if price comes down here, would you buy here? Okay, I'm asking you guys in the comments, okay? Would you buy here? Just simple yes or no. I think I know the answer to this, though. Yeah, we got AP wants to buy. M76BB says if it rejects, probably if it bounces. Okay, we got some good ones right here. Nice. Wait for retest. I like that one. Wait for retest. No. Paul doesn't want to buy here. Why do you not want to buy here? Tell me why you're not going to be buying the most beautiful level, the most beautiful support level. You don't want to buy that. Okay. Paul does not want to buy unless there is enough confidence. Depends if we have a strong rejection. If it bounces, I will buy. Okay. So you're going to be buying here. Now let's just assume that we're looking at only proof of retest. Okay, so wait for retest. Okay, so a lot of people look for the retest. So, okay, let's wait for price to actually hit that level. Well, we hit that level. Let's assume that we had buy orders right in that very area. And let's assume we got, where would you guys have your stop loss? Let's make a couple of alternatives here. Would you have it here, or would you have it below that one? So let's do 1, and then we'll do a 2. Why did that not show up? 2, make that big. Then we'll make it 1 here. So where do we have stop loss on? 1 or 2? 1 or 2? Henry says 2. And another one says 2. I got 2. A lot of 2s. Yeah. Okay. I'm gonna have to write it once, but we'll do 2. Okay. Where would you have your TP then? Where would you have your TP? Would you have it? Would you have it here, or would you have it here on the number 1 or number 2? Okay, we got someone saying swing high. We got 2, 2. Okay, 2. Nice. Okay, good. Where most people, we can assume something here, right? Most people, they do the obvious. Okay, let's just put that a little bit higher so that it's actually filled. So most people do the obvious. Now remember, guys, we have to remember something. What's the failure rate in trading? Some people say 90%, some people say 95%. There's estimate that says that it's even as high as 97. We're going to say 95. Now, I would say that most of you watching this, you have an entry level knowledge of technical analysis. Okay, there's most of you. And some of you are more advanced, but I'd say that a lot of people have a pretty good foundation for what's going on. So we could probably say from our viewers, I'd say we have around 50% profitable, not profitable, maybe instead of that 90. But most of you are choosing these levels as your trade levels. Okay. We have a lot of people saying we should have put our entry orders in here. Let me just see if I'm getting filled on this one. Yes, 752. We're actually not filled, right? 7. Yeah, we should be filled on that one, 752. Now we had I'd say about less than 10% said wait for confirmation. Okay, about less than 10% said wait for confirmation, and I'd say also less than 10% said have number 1 as your TP, which makes sense because number 1 as your TP would mean that you're basically is getting 0.6R, which is negative. A lot of people don't trade with negative risk reward. It's not interesting. So now let's see what actually happens on CAD JPY. So what does confirmation look like? Like we're looking at the daily right here. So let's switch. Now let's assume that this could be any time frame, right? But we're looking at the daily right here. So what does confirmation look like? On this particular time frame that we're looking at, I wouldn't really say that this wick here is not really the confirmation I'm looking for. I'm looking for more of a bullish, like at least a bullish candle, right? So let's see if we can get some sort of bullish candle. That could be confirmation, right? But what I would like to see is perhaps a reclaim of that level, maybe a bullish engulfing or a candle kind of breaks above that level. That would be a good confirmation. And we do not get that. You see price falls. So this is actually the end of the trend. So the people that said wait for confirmation, which one of them was Paul Brown, less than 10% said wait for confirmation. Those of you who said wait for confirmation would have been profitable here. And that's, less than 10%, which means that 90% of you were losing money on this trade and 10% of you wouldn't have lost anything. It's something to think about, okay? It's something to really think about, because if you are one of those who said, I'm just going to put in limit orders here, I'm just going to enter the market as soon as it touches this level and shows any sign of bounce, think about that. If you would have waited, if you would have been a little bit more patient, you could have saved money on this trade. You wouldn't have been losing money on this trade. And the same thing goes for the take profit levels, okay? Very few people said number 1. Most of you, the vast majority, said number 2. But what if you start switching that around? If you're not profitable today, maybe do what the 10% says they're going to be doing. Maybe look at TP1 instead of 2. Maybe wait for confirmation instead of not waiting for confirmation. So sometimes in trading, doing what everyone else is doing might not work out very well, because remember, 95% of everyone in this industry, or beginner trader, I would say, is losing money consistently until they quit trading. I think the statistic is like 95% of new traders fail within the first year, and that's insane. That's a big number. Imagine that. So yeah, just a thought experiment and a trading experiment here to make you guys think maybe what you're doing today, maybe flip that around. And let me give you a story from my own trading, where I used to take trades like this. I can show you, maybe we have a good example. Yeah, I mean, this is a good example right here. So I used to trade like this. And this is actually a really good example. Let's add the fibs here. So whenever I had a break and retest of a level that's also confluent with the 4-hour EMAs, I used to have a strategy where I put in, let's see, which one is it? I enter on the on this candle, because that's I'd call that a hammer or pin bar or whatever, but it's a bullish candle and it fills up that whole reload zone. Looks good. I would put my stops probably below the wick of that candle, and then I would look at the targets up here at the minus 0.618. That's a 5.2 R trade, and then I would TP at 25% at each of these levels. So my average exit would be between these two. So my average profit on this one would be slightly lower than 4R. Okay, that's really good, right? And as you will see, when these trades run, when they work out, they're just picture perfect, and they work out just absolutely, beautifully. You see, we come up when we hit that level right there. And these are the trades that I've back tested, and I saw that, all right, this is the way I'm going to be trading. This is the profitable way of trading, and these are the winners that I want to be seeing. And this worked great in 2019, 20, 21, 22, but then last year in 2023 and this year, everything changed. Okay, this indicator is the RL said slingshot. It's my private indicator. I do have a trading community, but I try not to. This is the 5ers live streams. It's not. I keep that separate, right? But this is the indicator I used in the past, and you can just add the 20 and 50 EMA on here. But what I'm trying to explain here is this was the way I was trading. But then the profitability of this, I wouldn't say that the profitability of the system changed. I think it was something. I think my expectations of the system, something based on psychology change, which caused my equity graph of this with this system to basically go sideways for way too long. And I'm like, this is not right. So what I did was I flipped everything upside down. I removed everything, every indicator, everything, right? And all I did was look at horizontal levels. And you can see that you have a level here. All I did was just, look at horizontal levels, enter based on the bounds of those levels, a much wider stop loss. And instead of taking profit all the way up here for 4R, I'm going to TP all the way down here. And that, I know this looks absurd. This just looks insane, right? But what happened was it turned around. Like that sideways equity curve turned around, and now I'm applying this. I've back tested this for a while, and I've live traded this for I think 3 months live testing before actually applying this to the way I'm trading today. So going from catching these moves to that move made me more profitable. Actually, what that means is not letting my winners run made me more profitable. Risking more than I win on a trade with a negative risk to reward is a good example of absolutely is flipping everything upside down. So the example that I just had for you guys with the different levels and the break and retest, if you were one of those that said buy, put in a limit order, have the highest TP, have the stop loss at the swing low. I want you to think about that. Why do you have that approach? Do you have that approach because everyone else has that approach, because it's obvious? Um, you really need to have the data to back that up, right? We all learn that a break and retest, buy on support, sell at resistance is the way to go. But through testing, I've discovered that for me, it's not the most optimal way of doing things. And you have to think about that. Why are 95% of the people in trading not profitable? What are they doing? Maybe I need to do something differently than what the 95% are doing. I mean, you look at Victor. He has a very unique way of trading, very personalized and unique way of trading. Now, this is an interesting comment. Forex is rigged. I don't care if it's rigged. If I can make a living trading Forex, or if I can make money trading Forex, I don't care if it's rigged. I mean, comments like this tells me that you're blaming someone else for what's happening. Okay, if you take a trade and it hits your stop loss, that's on you. That's it's not manipulation. It's not a rigged market. It's simply because you decided to take the trade and you put the stop loss where it is, and price does whatever price does, and it hit your stop loss. You know. Okay.
Yeah, for sure. Yeah, you mentioned a couple of things. If you want to be in the minority of the traders, meaning the profitable ones, you have to do things differently than the masses. And the masses, what do? They follow each other. They copy strategies without testing them. They execute their strategy without backing them up with data by themselves. And what else do? They go on a hunch. Sometimes they have don't have the evidence to back things up. They also you know try to wing it, right, thinking I can do this. This is not so difficult. Well, if you do the same thing as the masses do, the majority, you will get the same results of them, not profitable in the long run. So you got to do the work. There's no way around it. You got to ask yourself, because in the real world there is a stark a very stark contrast with in trading, because in the real world you can apply common sense, what seems logic, and most of the time you're probably very close to the proper or the correct approach. That doesn't have to be necessarily true in trading, right? Unless you are very versed in how different tactics uh, 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 influence the results of your strategy. Unless you've already know that if I do this, it's going to be more selective, or if I do that, it will have this kind of effect on my win rate, it will do this on my risk reward. Unless you're very familiar with the effects of everything you do in trading by testing and knowing what happens when you apply these kind of rules, unless that is the case, probably what feels logical and common sense is not the best thing. And that's what Jonatan experienced, and that's what everyone, we all, I too, when you actually go to the data, you will find out that a lot of the things that you thought is common sense and makes sense and it's logical, but it doesn't give you the results that you expected. It might be something completely different, something that doesn't even feel right at the beginning. Only when you have the data, you can see, no, but this is the way to go forward because my data tells me that. And that is the way to do it. And the 95% of the traders out there, or a good part of that 95%, don't do that. And that's why they they're not profitable, sadly enough. And the discussion whether the market is rigged or not is not helpful, actually. We need to take responsibility of our ship. You are the captain of your ship. Each one of us
Yep.
is responsible, and you have to take responsible. I'm responsible for my actions. And the
That's very
results
well
you're
said.
getting in the market, the results you're getting in the market is because that person, I'm not trying to single anyone out here, but that person needs to, if you're not getting the right result, if you're still not profitable, it may mean that your system is not right. You don't have a profitable system that you're using, or maybe you have a profitable system but you're not applying that consistently, and that may have something to do with your mindset, with your discipline. Or it might be just simply you have a proper mindset and a technical edge, but your risk management is inadequate, right? It may be a different reason, but it means that you still have work to do. That's what it means when you're not profitable. You're still not there. You are in a process of growing and you haven't reached the point of profitability yet. It's not anyone else's fault. It's your responsibility to take control of your ship and guide it to profitable waters.
Yeah, definitely. Okay, so okay, let me see. I'm trying to multitask. I'm the world's most I'm the world's worst multitasker. That's what I'm trying to say. I'm trying to speak while typing, which is super weird. Just sent a message, saying hello and then the name of the person, and I was thinking about someone else. I called that person the name of someone else that I was thinking about, and yeah, okay. Lesson learned: do not do a live stream while also trying to hold up a conversation with someone. Guys, make sure to hit that like. The giveaway will start at 200 likes. We are currently at 122 likes, which means you gotta hit that like, and subscribe to our beautiful channel that we got here. Okay, so let's take a quick break from that discussion, and I'm going to look at the current open trades that I have. I haven't looked at the charts for the open trades after entering them, which I'm a little bit, like usually what I do is I have alerts on, right? So I have alerts on TradingView, and I'm not supposed to look at the open trades, because looking at them might influence me to make a decision. But it's not going to do that. But it's just it's definitely a routine that I have that I'm breaking now. So the first one is a long on CHF JPY, which looks decent. Okay, it looks all right. And let me walk you through the idea and the reasoning behind this trade. So basically what we have on CHF JPY is we're coming up and it really looks like we're breaking through this overall resistance area that we have here. It's a bit difficult to mark out exactly where it's at. So what I'm looking for in a scenario like this is on the 4-hour. I'm waiting for, I want to see a breakout candle on the 4-hour. And when you have that breakout on the 4-hour, and you can also see that it's a beautiful trend going on here with higher highs and higher lows. So when we got that break on the 4-hour, I basically just put my long orders on that high prior to the breakout. You can also go into the 1-hour, and now you see the current price right here on the 1-hour. And on the 1-hour, you see that you have, a level right here. And then if you're like me, sometimes you want to make sure that you add as many indicators as possible to confirm your idea, to increase that level of confidence. By the way, I'm kidding. That's just a very bad thing to do. But you do see that we're coming down. We hit that reload zone here of that up move. And I quite like what I'm seeing right here. And I'm hoping that we're going to get another move here to the upside. So that's CHF JPY trade that I got currently open. The other one that yesterday, CHF JPY was one of those trades that I was actually looking to trade. I was first looking at a possible move to the downside because we had that bearish engulfing candle on the 4-hour. But remember what I said, we still have a quite strong uptrend here. This is not something I want to be shorting. Maybe if we move like this, I could be shorting it, right? But now it changed structure and I'm willing to go long. And that's why, now we have a clear structure. We have a better structure to today. And then we have Euro AUD, is another trade that I've entered today. And this one obviously is not looking as good. Looking at the 1 hour, this is a trade where I'm now, because of the fact that we went straight through our entry, I'm now looking to perhaps look for exits. And actually, now that I see, I do not have alerts on here. I think I added those. Maybe I have them on mobile. Maybe I added them on mobile and they haven't synced with TradingView. But that's good. So I can show you what my process is for adding the alerts. What I'm going to do first is I'm going to be adding an alert right here. Add alert. And that one is going to say move stops up. Because if price moves like this, if price comes down here and then moves up here, I want to be moving my stops to here, securing the trade. Not taking profits or closing too early, but simply just moving my stops up. And what I'm seeing here as well is somewhere around this area, I see as the last support before hitting my stop loss. I got my stop down here. And this is that last line of defense, if you will, for the bulls. The bulls need to step in here. If we drop below this support area, then I'm probably going to be looking at exiting this trade. So that's what I'm going to do here. I'm going to be adding an alert. And that alert says, look for exits. And I'm most likely going to be basing that exit on a close on the 4 hour. So you can have the 4 hour trading down here, but if it's 1 hour before the close, I'm not going to close the trade because there could be a wick on a 4 hour. And that's trade right here. And one of the reasons as well why I have a wide stop loss on trades like this is because if you add the fib on this move, you'll see exactly where the reload zone is. And the reload zone comes in right here. And that level right there is where you have the 0.618, and that's in perfect confluence with that last support level. There's a lot of confluence going on here, so I'm not looking at this and thinking, I'm in a danger zone or whatever of losing money here. I'm simply just looking at this and thinking, well, we are hitting the area where it's likely to find support. That's my trade management on Euro AD. And the good thing about having these alerts is I don't really have to do any manual, trading. This is you could say that this is trading against the trend on the 4 hour. If you view this as the trend, then yeah, I mean, because you're kind of looking at that as a rejection and then it's going to move lower. But what I'm doing is I'm looking at high time frame levels. Okay, so I'm looking at daily levels, and if price hits those daily levels, I'm looking for a clear bullish reaction if I want to go long. And here on the daily, what we saw is we have this is also a weekly level, right? Price came down and we came down into this zone right here, and then I'm looking for a strong bullish reaction on the 4 hour at this level. And if you look at the 4 hour, we have a very strong bullish engulfing candle right here, telling us that there's a lot of buying pressure coming in here and simply going long here. I think the more I look at this trade, the more questions I have. Maybe it's not perfect, maybe it's not the best trade, but those questions are not for now. That's for my trade journal review later. All right.
A very
yeah, go ahead.
Someone at the trend question. The thing is, if you think about it, every time frame can have a different trend direction, right? The trend. So when you enter long, it might be counter trend to some other time frame, and it might be with the trend with other set of time frames. So if you only say with the trend or not, we need to specify. I don't mean you, Jonatan, but I mean in general for the viewers. You need to specify the time frame we're talking about, because when we enter, you might be looking something that is against the trend, but the actual trend is something on the higher time frame. Maybe on the daily it is with the trend, but on the lower time frames, on the hourly, it might have a downtrend, right? Something. So it's important to indicate if we're talking, if something is with or without a trend, to specify. What is it? What time frame are we referring to? That's for the question we received. There was another question, by the way, Jonatan, about moving the profit. How would you respond to this?
Yeah, no, I have one TP, and that's the TP I go with. So in this case, I gotta actually look and see why. I have to look at the actual entry I have on this one. So Euro AD, I entered at 60, 62, 68, 9. 62, 60. What did I say? 62, 68, 9.
Yes, it sounds like what you
68,
said.
9.
Yeah.
I think that was actually my entry. And what's my TP? My TP is... Yeah, so on this it's actually lower. It's 6, 3, 1. What am I looking at? Euro 86. 63147. Yeah, so that's the TP I got on MetaTrader as well. Now looking at this is not a good take profit, and I'll explain why. You can go all the way down to the 1 minute, and I'll show you. So let's put in the TP here. Yeah, I mean that's the absolute worst place to have a take profit order. Right above the highs, because what you want to do is you want to front run this. If you're going to take profit here, if you think that I'm taking profit here because this is the FTA, this is where I'm expecting price to run into trouble, why would you want to have your TP up here if you're going to be front run? Like, you want to make sure that you front run. So now I know that at a minimum I can have a 0.54 or 53 hour trade, maybe 52. So what I'm going to do here is I'm going to place my TP on that one. I'm going to go in and I'm going to select 7. Now the risk to reward of this one will not be as high as planned, but that's okay. It's now 0.5, which means I'll make 0.47 or 48 on this one, but that's okay. It's much better to front run the level than to risk not getting filled on that TP at all. So I'll go in and I'm just going to adjust this on TradingView. Make sure that I'm on the right account. All right, so that's that. So that's Euro AD. Now let's just switch over to CHF JPY, and we're going to do our trade management plan on this one as well. Got our stop loss is down here. So that it looks good. All the numbers are correct. Now, what's the plan here? Okay, when should I look for exits? Well, I want to look for exits at the same area on this one. Where's the last line of defense? I think that's going to be here, right there. So below this, I'll put an alert on, and on that alert, I'll say, look for exit. Am I on the... Okay, look for exit. And then where do I want to secure the trade? I want to secure the trade probably up here.
What do you mean by secure the trade? For everyone who is not familiar with that term, what do you do?
Yeah, securing the trade basically means Yeah, so you can see right here we have a bullish reaction at this support. If price continues to move up here, there's no reason for me to have my stop loss down here. The reason why I have my stop loss down here is to make sure that I can have a, maybe a wick going down here, and then you have this, that's why I have my stop loss down here. But now the entry has already happened. That the entry happened here, the bounce happened here. So if there's confirmation that price wants to move higher, then I'm simply going to move my stops here, and that means
What is
securing the
your,
trade.
how do you know that, when are you supposed to, make your risk less? How do you, what is, do you have a cue, like something you look for, or is it something more discretionary?
It's well, I guess it's discretionary, but it's very simple. It's basically the same. What makes it more mechanical is I'm looking for a specific thing, and that is, if you have a trend like this, and then price is about to come down into your level here. So you have the first bounce here, and then you have the second one here. So let's say, you have, let's say you have a 4-hour candle closing here, and I'm ready to put in limit buy orders at this level right here. The problem though is I don't know if price is going to bounce here or if it's going to bounce here, like or here. I don't know where it's going to bounce. I'm going to give the market enough room to error to decide on its own where it wants to bounce. So if price comes down here and it bounces down here, that confirms my idea, right? My idea is confirmed. The trend is intact, the trend is alive, and price did bounce for the next leg up higher. So now I know that the market did bounce here and not here. So what I can do is I can now use that bounce area as my stop loss level. That's basically what I'm doing. Alternative number 2 would of course be to wait for this confirmation and then enter here, have stops here, and TP here instead, because now that bounce has already happened. So while there's a lot of discretion involved, it's actually quite mechanical, because if you look at CHF-JPY, it's basically okay. We have a very very bullish move right here. We get the 4-hour breakout and entered on that retest, and yeah. So a lot of discretion, but also quite mechanical.
And what do you do when you say secure the profit? Do you just make it half? Do you put it to BE or something? Do you have a specific way you do all the time, or is it depending on the situation?
So I think I find that if you're going to be securing the trade, basically what that means, like there's it's when you say secure the trade, it's almost like you're giving yourself a false promise, because you're not securing anything. Like as long as you're in the trade, as long as you have unrealized profit, you can't really secure anything. Like so if you have specific rules that says, okay, if price does this, I'm going to move my stop to break even, or I'm going to move my stop 50% up, or something like that. I'm going to, what I find is best is just follow price action. Okay. So I don't have any specific rules on when to move stops to entry or anything like that. I'm just moving my stops based on price action. So now, I mean, if I would move my stops to, I mean, if price breaks out here, hits that high, and I'm going to move my stops to break even right here, that means there's a very, very high risk of me getting stopped out at entry and then hitting my TP. So what I have to do is I have to limit the risk based on whatever price action is telling me. Right now, price action is telling me that this is support. I can now, when that support is confirmed, then I confirm it on the 4-hour. So if the 4-hour candle, closes a little bit higher, actually it's going to close in 4 minutes. So maybe That's actually interesting. I might actually be able to secure this trade, at least move stops here with the close of this 4-hour candle, because now it kind of confirms that this is support. Yeah, you know what? I can actually probably secure this trade a bit at the close of this 4-hour candle, and then have my alert here for potentially exiting the trade. I think that's actually what I'm going to do. On Euro AD, we still see that support holding as support, but you know, I have as much conviction in this trade as I have in any other trade. Honestly, it's just I'm trying, put in the orders. I've done the analysis. There's no point of me, looking at this um, anymore. We do have a lot of.
We had
We do have a lot
basically
of.
based on conviction. We do have a member, a viewer asking if you grade your trades, like having A plus, B minus, and so on, where you approach the setup differently because of the perceived conviction or perceived profitability, or the conviction you feel behind on any of those setups. Do you have that? Do you make a difference between the setups you take? Ones are
So
better than others?
I've heard a lot of people talk about rating setups, and I think for some reason, I'm not sure why, but I hear a lot of traders in the equity markets, trading the stock market. A lot of them have grading their setups like a plus or a triple A setup or something like that. And I do see some people in the forex market do that as well, but it's not as normal as in the equities market. But what I ask myself when I hear that is, if you have a setup that is A plus, why would you take anything else? If you have a setup that's A plus, you know that it has a great win rate, it has great risk to reward. When this setup comes along, I'm gonna risk more. And then you have a B minus, which is like, this is not as good. This is not as good. What I'm thinking is, why not only take the A plus? And that's what I'm doing. I'm only taking the best setups basically. And I think
Well, I can imagine. I do it the same way, Jonatan. So I only have one setup. I don't have a superior setup and an inferior or any grade system for my setups. But I can see what they mean. It is when you have multiple setups, which are not all of them are profitable. So it makes sense to take all of them. You've backtested, different setups, and all of them are profitable, so it makes sense to take them. But there is a difference in the expectancy and the profitability of when you compare one to the other. And if you have it's like if you're like, if you're in a horse rate and you're able to bet on different strategies, in this case horses, do you want to be betting the same amount on uh, all the horses equally, while knowing that one horse is much better because you have data to back that up? If that is the case, it's more profitable, then it makes sense to risk more on the one that is superior to horse, and in this case the strategy that is more profitable. And I think the reason people they trade other strategies or other setups as well, which are not the A plus setup, it's because of the trade frequency. That A plus setup may be the best one, but it may only happen, every other day or every week. And there are other opportunities as well that may not be as profitable, but are still producing profits in the long run. So I think that I assume that that's it has to do with that frequency of trade and the difference in profitability comparing different setups based on the data, hopefully. You're muted.
I am muted. Yeah, we had one comment here saying, if B minus is profitable, you should take it. And I can't agree more with that. I mean, honestly, I think I think what I'm saying though, and what I'm doing is, maybe I just don't have maybe I can't focus on more than one setup. I think that might be the case, because I've set up my whole trading process for one specific way of trading. I do have multiple setups that I can trade, but there's a lot of work involved in creating multiple setups to be traded simultaneously. Now you have to have multiple processes put in place for each of these setups. You have to perhaps scan the markets in different ways. You have to maybe have different trading view layouts for the different setups. It's just what I can say though is that I have different variants of the same setup. I think that's what I'm good at. I have, I can look at a level and I can say, either I can put up, A, B, and C scenario, but I'm not going to take those trades with different risks, because to me I kind of clump them together and say, yeah, this is one setup. But I mean, you could break it down and you could say, uh, on CHF JPY here, for example, which by the way had a beautiful 4-hour close right here. As you can see here on the 1 hour, the price is now pushing up here with a good wick here on the 4 hour, exactly what I wanted to see. So before we move on here, I'm just going to go ahead and move my stops to this level right here and see it, but I'm going into CHF JPY on MetaTrader and just adjusting the stop loss here. And now we also have a 4-hour close, of course, on Euro AUD, and we can look at that. And this obviously does not look as good. And I probably will probably have to exit this one, because we can look at Euro NCD, and we see that it's a massive drop to the downside. We can look at Euro CAD. It's kind of failing to see that push to the upside. Euro CHF as well, coming up into that resistance area. We can look at Euro USD. Although it did have a bounce here, it's definitely showing signs of having some trouble getting through this resistance right here. So Euro on a whole looks quite, let's look at Euro GBP as well. Looks relatively weak. So right now I'm going long on an asset that is relatively weak, and we're seeing strong price action to the downside. But I have my alert, I have my alert right here. And if price drops below, you can also see here on the 1 hour with this wick right here. If price managed to break below here, then I think it's time for me to take the loss on that trade. And hopefully, if CHF JPY hits that TP, I'll be able to.
If I may interrupt you, that looks like a very nice quasi right there on the 1 hour. If you you have go on the H4, if you don't mind. Look at that outside bar.
Yeah.
Right. So that's the buy area for me. And I go to the 1 hour. If you can go to the 1 hour.
Yeah.
You do 1 hour, and you see that order block right there.
This one, yeah.
Yeah. That's my sweet spot. That's where I want to be buying. It looks very, very, and it broke structure. So I know it's different. It's my strategy. So we're doing different stuff. But to me, that looks so juicy.
All right, Victor, you want to take a break, right?
Yes, I'm going to be. I'm gonna, while you're going over these pairs that you're doing, I would be. I'll be away for a couple of minutes. I'll be right back with you guys.
All right, perfect. Okay, we got 180 likes right now. Let's see if we can get that number up a bit. We can release the code for the giveaway. This is not the type of price action I want to see. So we're definitely going to be monitoring that throughout the live stream. Give me a second. Right. Not looking great. Okay, so on CFJPY, we're getting that move to the upside. That's going to be a 0.53R trade. Let's see, where do we have the 50% level right here? The 50% level of this one is right here. So if I get out of this trade here, that means I'll be break even on these two trades right here, basically. But I still do not feel like I'm ready to exit this trade because it does feel like it has a fairly high probability of bouncing here. So I'm gonna put an alert here as well. Let's look at the news as well. You know what? Let's go through some questions. Maybe you guys have some questions that we should be going through. Okay, here's a question from Henry. What's up, Henry? Well, you know how when you backtest, you see which confluences have better success, could maybe increase the risk if more than one strong confluence are present and gives confidence. Yeah, I mean that's one way of doing it as well. I think that's one way of doing it as well. Well, however, what I like to do is I like to look at what confluences are best and then only trade that. Only make sure that I'm only trading the confluences that are actually actually best. But that it's one way you can do it. You can look at the best conferences and then manage your risk around the effectiveness of that. Because I just saw a good question right here. Is it normal to lose 6 trades in a row and you are profitable at the month, or should I change the system? Yeah, I mean, you could definitely lose 6 trades in a row. That's not uncommon at all. I mean, if you have a 50% win rate or even lower, having 6 trades in a row is not uncommon. That's something you'll go through. That's something a lot of traders will go through on a regular basis. You can look at a Monte Carlo simulation. Look at a Monte Carlo simulation, and you'll see you see the statistics, and you'll see the probability of having a certain losing streak. You also see the max consecutive losses in a row, so that's quite good. And yeah, like Akash is saying, Victor is profitable with only a 20% hit rate, which means he'll have many losses in a row, but he has such a high risk reward. So Victor usually doesn't talk about his risk reward, but because he thinks it's almost too good to be true, which I can understand in this industry where you have people selling dreams and basically trying to sell services where the results are too good to be true. But I've seen his trades, I've seen the results, I've seen the statistics, and I've seen him. We got this group that we have, we're posting trades together. Like he's showing me trades where it's like 20R, which is just insane. Like 10, 20R, and I'm looking at that. I'm like, yeah, okay, that makes sense. If you have 20% win rate, but then all of a sudden you have a trader where it's like you get 20R return. Yeah, it's then I think I don't think it's difficult to get a 20R trade. Okay, it's not difficult to find. It's just find a level, a high probability level. Look at the lower time frames. Look at where's the most optimal entry and stop loss, and then look at where the top is, like the FTA on the higher time frames, whatever, and you'll get 20R. The problem is holding on to that winner. Like imagine the discipline of seeing the trade up 5R, 10R, 15R, and then like, oh, I'm gonna hold this. I'm gonna hold this till 20R. That's quite Quite insane. Let's see, what else questions do we have? Do you take stacked up trades, add more trades to the winning trade, or only one trade at a time? Yeah, only one trade at a time. I only take one trade at a time and one position at a time. All right, let's see if we can, if we have to get out of Euro AD here. We did move up stops on CHF JPY. And now I'm hoping that we can get a bounce here on Euro AD. And with that bounce, I'll start moving my stops up. But we'll see. It doesn't look great. All right, Victor. Now that you're back, let me take a quick 5-minute break, and then when we're back, we'll probably have 200 likes, and we'll take a look at that giveaway. All right.
Before you do so, would you make sure that I'm able to see which questions you already answered, so we don't answer the same one for our audience? You're muted.
Yeah, I haven't answered anyone in
Okay.
any of the starred messages.
Okay, all
I'll
right,
see you guys
perfect.
soon.
And I'll check the charts, and we'll be here. Take your time.
Perfect.
All right, so let's put the let's put the chart on. Well, we have in the, let's see, what do we have? This is kind of the, I'm trying to catch the the proper profile for the layout, basically, not profile, layout for the camera. But this is, I think, good enough for us for the time being. All right, so let me check the chat to see if we have anything you guys are asking about. I have been away, of course, for a couple of minutes, so I'm not sure what exactly the topic was, but it doesn't matter. I think there is a great question here. I don't know if it was discussed or not. The calculation for risk per trade, which is also called the position size. The way to calculate your position size is a very important component of your risk management. It's actually one of the tools by which you enforce your risk management. It's by starting to decide how much to, how big a size the trade should be. And that's one of the actually most important things in risk management, because the size, of course, will be deciding how much risk you're putting on. And how do you do that? We can go through the calculation with you. Typically, what you need to know is the distance to your stop loss, and you divide the amount you want to be risking by that distance. Actually, you need to calculate what is the value per pip or per unit of increment, and then divide that with the number of the distance, and so in this case the number of pips, and then divide that by the value of the pip, right? So the pip value. But there's a much easier way to do that. And by the way, the asset changes, so the pip value can change, is able to change between different assets. You need to calculate that per asset. But there's a very special way, or a very easy way, which is through an indicator. And there are many on the for free, but the one of the most popular one is the position size calculator. You can Google it on earnforex.com, if I'm not mistaken, and it's an indicator. It's an EA that will be able, you just put in your stop loss, and automatically it will calculate your position size, which is actually, I recommend doing that. I recommend calculate it for a couple of times to know how to do that, but it's much better to do it automatically, because you eliminate the chance of a human error. Because once you put in the stop loss correctly, there is the chance that that you don't get the proper size is very, very minimal. And that is part of your risk management, right? Eliminating or minimizing the chance of you making an error, a human error in this case. Let's see. I'm going to answer some questions that I saw during the stream that I haven't got the chance to, that we haven't had to touch upon them yet. We have, let's see, we had a question on, well, we discussed this about the Martingale. This user is asking, I ran across someone who uses Martingale with a loss limit. Reset point seems to work for him. I will stay away though. Yes, I'm not going to talk too much about Martingale because, well, it is very important for you guys to know that it is a time bomb and it is a account taker. It's a bomb for your account. However, that is true for Martingale in the pure sense where you double on um, uh, each loss. Not only that, where you don't have a stop loss, right? That's part of the Martingale. You don't work with a well, actually, you do work with a stop loss, but there are systems of martingales where you don't have a stop loss. You just wait for the market to go against you, and you open another trade so that you can recoup the loss. Typically, without a stop loss, you already know that you're going into dangerous zone here because your risk is basically unlimited. Um, so it's Martingale is typically a bad idea. However, there are ways you could take something similar as a Martingale and have risk limits put into place where you don't go unlimited levels by doubling it, but only like one or twice, and then you stop and you start again. And there are ways to use that, but as I said, it doesn't add edge to your system. Typically, it doesn't add. So the risk management in itself, you're going to smooth things out, but you're going to have bigger losses from time to time. So there is if you keep the losses very, very small, I can see that work out. But I'm not a fan at all of Martingale, and I think you should be looking for Martingale for answers. Typically, it's you're adding risk to it, and if you don't know what you're doing, you're better off not doing it at all. Okay, let's see. What do we have? We have. I'm trying to catch a good question here. We have a Akash talking about the negative R multiple or risk reward, the ratio, where you have negative boosting your confidence, of course, because you have a high win rate. But of course, you will have big losses or bigger losses than your profits. So that's a two-edged sword. Where those bigger losses can also affect you. So it's better on your psychology most of the time until you get one of the losses and God forbid a couple of those losses, and then it's not so easy to your negative to your mental comfort, let's say. But I mean, you have to look for that which goes better for your personality, and some people thrive on negative risk reward, and if that's the case, then by all means you should be doing that. You should do things that make you more profitable, more able to follow the plan. So I saw this too as well, and let's look at this pair pound Aussie. If we look at the pound Aussie, I believe I have it here, and this person Shane, thank you for this question, says, Victor, can you look at the pound Aussie dollar 4-hour chart at the last 4-hour bull candle, which is an outside bar, and please give your input on this. Well, the last bullish bar, which is this, right? It depends on the price feed because it's very tight, very close to that level, right? To the previous candle, because for a proper outside bar, it needs to take out, right? See this? It needs to take out the previous candle. So the bullish candle in this case, for it to be a bullish outside bar, the low needs to be lower than, let me put some candle, some the this candle, right? The low needs to be lower than the previous one. And as we can see in, if we zoom in, it is not. So, and this may differ between price feeds. You may have a little bit of a difference, a pipette or two difference in price feed. And if when that happens, what I like to do is check multiple price feeds, right? So and if the majority have the same thing, then I'm going to go with that. Otherwise, I'm going to disregard it. But in this case, on this time frame, there is no outside bar, right? So, however, it is an engulfing though. So the fact that it didn't meet the requirement for the outside bar doesn't mean there is no order block there. There is one, but it isn't a, according to the rules, it isn't a, this is an H4, so there is an order block there. And you can look for higher time frames confluence to see if there's something in here. And yes, I see a bigger daily. We are in a daily order block, which I like a lot, right? Not only that, where is that daily order block placed? It is a bounce, right? The buyers came in and they tapped into that order block and then reacted favorably. So I would expect this to happen, this to be the most likely place, looking for the higher time frame. And if I do that, and I go to the lower time frames, and I can identify an order block which is still fresh, like this one, then that is a great way to find great trades. And if I go to the lower time frames as well on the H2, you can see where I'm going with my top-down analysis. I'm getting better and better entries, or tighter entries. Let's see on the H1 what it does, what it gives us. And I get basically the same area. So I can use this or that, it doesn't matter. And what I would do is I would be focusing on this order block, and that's the place where I want to be fishing for my long. Of course, I wait for my confirmation, right? And that confirmation can be anything that you think that indicates a reversal in the market. You could just enter, I don't know, you could go to the lower time frames and wait for, some bullish order block, or some bullish candle, maybe an outside bar, maybe a pin bar. It's up to you. You can do many things. What for example, on this, I see an area on the 50-minute. That's where the buyers came in, right? So that's an area of interest to me. If I have any structure, any pattern that I know that is an indication of reversal, and that does something like this, let me put it correctly. Let's say you have something like this, and it touches that order block, and then from that order block has something similar to that. You bet I want to be part of this, right? You have a break of structure, and it comes back into, even if it doesn't come back, just the fact that it closes bullish like this could be a reason for you to take that trade. And if you do that, let's say you enter there, you put your stop below, you can target on the higher time frames. You can target either this high, something in that range, or perhaps even on the daily, because we do have a daily structure, a daily setup. And so that means that you could be targeting, let's say, the next daily order block, right? These are the traits that I love taking because they give me that higher win risk reward. And you can be targeting anything in here, or take it conservatively and just target that, right? With not even with a very tight entry, you can already see how that trade is, very interesting. And this is, of course, with a stop of a huge stop to me. Let's look at this. This is 43 pips. don't remember. I don't take trades like this. Mine are, of course, this is pound Aussie, so it's going to be a little bit wider than EU, maybe 10 pips, maybe, yeah, around 10 pips, I would say. So something like that. Let me see, how can I change this a little better? Something about 10 pips. 15 pips I think is plenty. If we can do something like that, you can see how that risk reward explodes, balloons up to some very decent area. So that's my ideas on that pair. I don't trade it, by the way, but it doesn't matter. I trade all pairs the same. If I see a setup, I know that the odds are in my favor. If I do my same process, top-down analysis, looking for those structures, and then go down lower time frames, finding the right the right place to be entering, where the value is, in my opinion. So Jonatan is back, but we let me continue with. I think I saw a couple of questions in here that I would like to answer.
Got the giveaway code as well. You can see the giveaway
Okay.
code here on the screen, and you have it in the in the comment, pinned comment. It's in the link in the description. You put in the code in the. There's a link in the description of the video. You click that one to a Gleam site, and then you use the code in there.
All right, that's awesome.
I think you had a question you wanted to go through.
Yeah, I'm going to go through the questions to see if there's anything else. I believe I saw someone you reacted. Well, okay, so that's not a. Let me see. I think I saw I watched, I heard you say something about the this question, so I'm not going to answer it, because I think it's already it was already answered. And to me, rule to move the profit higher. It depends. And actually, I wanted to say something about something else, about the grading system of different setups. And I know exactly what Jonatan said about, equity market traders. They typically have, they mention that a lot of the times. And I suppose it makes a lot of sense to them, because they may be trading, different kinds of setups, and many at the same time. They may have like a playbook where they have, dozens of different setups, and it makes sense to distinguish between one to the other when you're comparing them. But as Jonatan is, and as I am, where we have worked, put in hundreds of hours on one strategy to get our data, which we optimize to a specific setup, it's not very realistic for us to be manually trading dozens of setups. So we're you only by adding more setups to your playbook, if they are strategies that you need to optimize periodically, that take hundreds if not thousands of hours to get the grip and execute well. You don't want to be doing many at the same time. You want to specialize in one, because it is better for your execution and your consistency. And that way, and that answers why we don't, at least I don't, and Jonatan doesn't have like those grading system. But I mean, it doesn't mean it's wrong to be doing that. If you have data to indicate, if let's say you have the same strategy but you have different entries, right? And you see that the different entries, let's say at the beginning, I remember someone mentioned that, Haresh, I think, mentioned this. If you enter the same setup, but the trend, right, is starting, right, it is a different probability than when the trend is already halfway going to its target, right? And that's basically the same strategy, but still they have different probabilities. And based on the difference of probability, if you have the data, you can say, well, the first one is an A plus setup, and the second one is a B plus, where both of them I'm going to be taking them because both of them are profitable, but one is going to run when it runs further away than the second one, and for that reason, I'm going to prefer one above the other in terms of risk, how much I risk. But the best advice I can give is let's focus on being profitable, and let's focus on being consistent first before you go on to do, making things more complex by having different kind of setups. It's difficult enough to get one system working, validated with enough data, knowing everything optimized and executing mentally how to handle drawdown and everything else. That already is a big feat, right? So let's do that. When you can do that day in, day out well, then you can expand to other things like grading your setups if that is an issue, or something that can help you out. But let's not complicate things at the first few years. Focus on getting consistency, and simplicity is key in that. So keep it simple, get profitable consistently, then you can expand into maximizing your profit, because that's what the great system is about. It's about maximizing profit by giving setups that have greater odds or probability, a greater risk. All right, let's see, do we have something in
Yeah, we got this question. Yeah, I think we can cover this question quickly. How do you handle performance pressure that comes with trading? So I think what works great for me is making sure that I don't spend too much time at the screens. I don't spend too much time looking at the markets. I do my so what works best is like meditation and physical exercise. You take care of yourself in a way that would make you feel better, in any situation, any performance field, or any under any performance. Meditation, physical exercise, taking care of yourself, and taking breaks. If you feel like it's too much, it's okay to take breaks. I'm looking at Euro NCD, and it's just dropping like crazy right here. I think that's a pretty insane move right there. And my Euro AD trade is not looking great. I think I'm just waiting for a bounce here to get out of the trade really. But looking at the other Euro pairs, it's really dropping. Well, Euro NCD at least is dropping quite quickly. So is the GBP NCD. So there's a lot of weakness in there's a lot of strength with the NCD right here. Wonder what NCD. Oh, look at NCD JPY. Yeah, that would have been a good long. But yeah, I think this is a good example. With the performance pressure that comes with trading. How do you handle that? So you look at Euro AD, and I'm in a losing trade here. Remember, a lot of my trades, I exit my losers before they hit that stop loss. So now I'm in a situation where it's like, what like I need to make a plan. I think making a plan is very important when it comes to that, because if you don't have a plan, you'll be confused and stressed. But right now, my plan is my plan was to wait for the 4-hour candle to close, but it could very well come down and hit my stop loss. But that's what I'm going to do. I'm going to risk having that stop loss hit, but I'm going to wait for this 4-hour candle to close, because maybe we'll have, maybe it's going to close above here. We also have news event coming out in, I believe, 20 minutes. So that might be the fuel to move higher as well. But I think, yeah, my main advice here would just be like mindfulness exercises and physical exercise. I think that's super important. Is there anything you want to cover on that, or you want to move on to the next one?
Yeah. It's a broad and big topic, but there are a couple of mind hacks that you can implement. We've mentioned them in the past. And there are a couple of things that need to be in place for you to be able to handle the pressure. One of them, and it's all of them. If you miss one of the things that I'm going to be mentioning, you will have difficulty managing that pressure. One is, of course, you need to have a system that gives you confidence. And how do you get a system that gives you confidence? That is a system that has been validated with an ample data sample size, right? A data set that is big enough and which you are gives you confidence by looking at the data that data is telling you it didn't happen in only 10 trades or 50 trades, but many trades. 100 is not even that much, but at least as much as you can see that this setup is not about based on a couple of data. No, it's based on a long period and a lot of data. The more you have, the more confidence you can be of your system. If you have a system that gives you that confidence, automatically you would be it will be easier for you to handle the pressure, right? Because you can trust your system. The other thing is, um, try to understand that any single trade, every single individual trade isn't there's no way you can predict what's going. You'd have no influence. You can't decide if this single one will be the next one will be a winner or a loser. There is a natural randomness in the sequence at which the results will be coming out. And when you decide, when you realize that and you accept that this can be a loser, and before you take that trade, you accept that this can be a loser, and even if it is a loser, you accept that beforehand, right? When you do that, you're desensitize yourself for the loss already. You started already. It's still gonna maybe hurt a little bit, but much less than when it's a surprise. That's another thing. One of the things you can do as well is try, unless your trade system tells you to do certain things while the trade is open, try not to be looking at the chart constantly, right? Because the more you look at it, the more you will be feeling things as it is going up and down. So it doesn't make sense. Let's say that you have a strategy. It says buy here, put your stop below this, and target this, and don't do anything for at least a couple of hours, maybe the rest of the day. Your trade plan tells you that. There is no reason for you to be watching that trade. If you've already done that, the only thing you can bring to the table if you do that is that you can fail at adhering to that trade plan, and you start twickering with it, and that's bad for your discipline and bad for your the pressure you feel while the trade is open. If you already did everything, walk away. There's nothing wrong with that. You did your job. Now let the odds work their thing, do their thing. The other thing you can do is, if you have to be watching the trade because you have to be scanning the market for the rest of the day while the trade is open, one of the things is have the system or your terminal in such a way that you don't see the P&L, right? Make it invisible, make it not visible, or maybe have that minimized, right? Or you can even have, and this is what I've mentioned many times, what you can do is have a master account where the P&L is not very high, and having the actual accounts slaved, copy traded, slaved to that master account, so you don't actually see the whole P&L going up and down. You see something that isn't that impressive, that doesn't really give you any pressure when you see it, because it's something familiar. It's not a big deal. A couple of dollars here and there, it's not going to affect your mindset. While if you saw thousands of dollars going up and down, you're going to be feeling differently. So there are many things you can do, and I covered just a few. The other thing I think, and this goes way deeper than what we can discuss on our live stream today, but there's a lot to be said about your mental healthness, your physical healthness. There's a lot to be done there, right? How did you sleep? How is your diet? How are you physically in shape? Now, those things may not seem relevant, right? You say, what does my workout routine has to do with my edge? Well, if you're physically in a better shape, you probably are more. It's going to be easier for you to be calm, to be focused, to be patient. So it will affect how you will be executing that trade plan. So although things come into play, um, and there are each one of them will have different strategies or tactics to optimize them. What else can we say? And
I
awareness.
think we
That's
can. I
what.
think we can move on to the next question here. Just do a quick, go through some quick questions here before we do the before the we do the giveaway. So I was going to mention here on Ivan. I do see that a lot of people have folders for their drawings. I think it's for my way of trading is a little bit too advanced. But what I do is I have one folder for all my trades. You can see right here, and I try to move that up as much as possible here or at the very top. And here's all my previous trades, and I have them in one folder, so I can take them off like this. When it's time to do my weekly trade journal review, I can have them all in one folder. It's if you have a system, like there's no point in having folders for everything unless you need to, unless there's a system for that to have it in. But it's it's a really good tool that TradingView has, and that's one of my use cases for that. Have all my past trades in a trade folder, so then when it's time to do my journal review, I can just click that I and have all the trades pop up, and still have them there when trading without removing them. What else do we have? Okay, so we got a catch saying negative R boost confidence, but switching from positive R to negative R requires a very strong psychology. But once you
I
switch, it
discussed
will.
that while you were away.
All right.
It's a very good one, but
Yeah. How do you
we
calculate
can
risk
move
per
on.
trade? Some told me about multiplication and division, but can't get it clearly. Okay, so you have to have a risk management strategy, right? But what I would recommend is there's an
Sorry,
EA for.
Jonathan. I discussed that. I forgot to take the star away to make sure
Okay,
you don't
so
discuss.
I'm just gonna
So
link the EA in the chat. That's the EA I use for MetaTrader that helps me calculate my position size for that one. Okay, what about this one? Have you covered this one? When day trade, it's a
no, I
good idea to
haven't.
have a rule on how many trades per day to take. Yeah, it's a very good thing to have. So, I mean, overtrading is one of the biggest problems in trading. So it's very important that you have rules around. I mean. We all have these rules and habits, automatic habits that we do in the markets that might not be, might not be good for your trading performance, right? So you want to make sure that you create positive habits and routines around your trading. And one of those things could be, you backtest your system, you look at the average number of trades that you're getting in a day or a week, and then you try to make sure that once you go above that number, you understand that you're now in the danger zone of over trading. Having a guideline for that is super important, because the system can only give you a certain number of trades in a week or in a day, right? And if you go over that number, you're most likely over trading. Okay, we got um, is this a problem though? Remove prohibition on closing already open trades during news. That there's no prohibition on that, is it?
No, there isn't. It's only about
If you
opening the
if you
trade. You're not
open
allowed
the
to open
position,
without. Yeah.
Yeah, if you open the position outside the news window, then it can hit TP and stop loss.
Hmm.
So this is not going to be a problem if you're unless you're trading within that 4-minute video window, and it only applies to the high stakes accounts.
Yes.
Okay, so I do think that we covered most of the. Okay, there is. I double checked with support. Okay, we have to double check this with support. We have to double check this with support because obviously we need to give the right information here. What do you guys think about EAs? Automatic trading. They're great when it works. You know, if you make money, if you're profitable following that, it's great. I haven't found one though, which is profitable long term. Guys, I think it's time to. It's
Yeah,
time.
well, EAs is nothing more than a mechanical way of approaching the market that is automated, right? That's the only thing it is. So basically, if it is a strategy that you know researched and constructed, and you have someone coded for you, right? I don't see any problems with that, and it's great. But think about this: if it's a commercial EA, if it is making money as they're selling or telling you it is, why would they be selling it if it's so good?
Yep.
And there
Exactly.
lies already the first answer is probably is it isn't that good, right? It's profitable for a period, or it isn't as profitable as they are telling you it is. Because I mean, if you have an edge in the market with a mechanical system and it is coded, I don't want to sell that. I want to keep it to myself and make all the money for myself. That doesn't make sense for me
Yeah.
to sell it. So that already tells you EAs are great ways, but I mean, commercial EAs probably not what they say it is. Just my 2 cents.
No, I mean, if I had a way to make money in the forex market by trading automatically and not having to do anything, I would guard it like the holy grail it is.
Yeah,
I
that's for
would.
sure. And it
All
makes
right.
sense, no, right?
We got two winners. We got two winners right here. I will be asking for you to confirm your email once again. It's not the best way of doing things, but it's the best way that I've figured out to do it. Let's see. Okay, here we go. Got one, John, and then we have Luciano. What you have to do now is you have to go in to the chat and you have to confirm your email, and you got 2 minutes to confirm your email. I'm not looking at the chat now, Victor, so if you could please see if you can find it, and
Yes.
then also star that one if possible. So I'm putting on a slow mode now, so you can only write every 30 every 1 minute you can write.
Okay. Could you repeat the names again?
Well, it's right here on screen. So John and
Oh,
Luciano.
sorry. I was looking at another screen.
Yeah, okay. Oh man. Man, what if I'm super lucky on that one? That would be fun. Oh, where's the right here. Okay. Yeah. No, Luciano, I don't want your full. Okay, let me see. So we got obviously one seems like 1-1. Where do we have that one? What's your email? Can you confirm with the first The first 4 letters of your email, John. So if you can, just write out the first 4 emails of your. No, the first 4 letters of your email.
Luciano, right?
Yeah, Luciano. No, not Luciano. No, okay, no, it is Luciano. Okay, no, I want the for Luciano. I want the last part of the. Okay, can you give me the last part as well, because that's quite obvious. Okay, we got
John here.
John. Okay, John's yes. That's confirmed. John's here. Now, is Luciano, you're probably the right person, but could you give me the last part of your email just to make sure, because the last part of your email is something that's not in, visible in the name. So we have a slow mode on, so I know it's going to take a while, and I'll have you type that in, and it's going to wait for that to be confirmed. One-minute limitation. Let's see.
There we go.
Yeah. Okay. Yeah, he's that's confirmed. All right, guys. So finally, we have 2 people who's actually here. That's awesome. No need to select the new winners. Congrats, guys.
Yes.
You're gonna get credits to your Hub account, and I will be sending it over to the team. I will be sending it over to the team today, and you'll get the credits hopefully within the next few days, but max 1 week. So please do not reach out to support with any questions around the giveaway. Just wait, and then if you if you do not have any credits within 1 week, then you can reach out to me directly. My email is jonatan.r@the5ers.com. Okay, guys, I think that's it. What I'm gonna do now is I'm just gonna look at the price of Euro AD bounce here, and I think this is also good example of Ghost Sniper. You've been emailing support and DMing me and others in the team asking for the giveaway, and like I've said to everyone else, it can take up to a week to receive your account, and you're gonna get your credits. I've taken your email, I've sent it over to the team. Just be patient. You're going to get the credits in your account probably within the next day or 2. So just be patient, and you'll get it. Things are going to work out, but my email is, I'll type it in the chat. No, that's right, Jack. You've never received yours yet. You're going to get one within a day or 2. The reason why it's taken a bit longer now is because we did such a big giveaway last Wednesday, and we did it in a way where it's just a little bit confusing, and it took a while for me because I had to actually rewatch all the live streams and actually look at who's the winner and then look at the usernames. Like, it just takes a while. But now, from now on, we're doing it quicker. Yes, those are the winners, Justin. Okay, guys. So tomorrow we have Anastasia coming on. She's going to show us a couple of her previous trades. Going to talk about, break down a couple of trades, a couple of setups, and show us how she's trading. Very excited about this one. Before we go, I just want to mention this one right here. Euro AD obviously came down, hit the lows right here, fairly close to my stop loss. But remember, I said I want to be waiting for the close of that 4-hour candle, and a lot of times I might have been a little bit impulsive and close the trade right as it broke down, but a lot of times I see that waiting for the 4-hour candle close is the best decision. We do actually have news coming out in 5 minutes, so what I'm going to do is I'm just going to wait for that news release, and then right after the news release we're going to look at price action, and then we'll end the live stream. It's a 20K bootcamp account. The winners, they win a 20K bootcamp account.
Yeah, I'm looking at the Euro Aussie dollar to look for any signs of a reversal since you're in the trade. Let me show the the area right on this price feed. This is the bullish order block on the H4, and on the H1 we have in bullish order block as well. That's the pair, right? Euro Aussie dollar, correct?
Yep. Yep.
Okay, all right. So that's the area that I want to be. That's the area that I want to be a buyer, but only if it confirms. And that can be anything you want. That can be a bullish order block on the 15, the 30 minutes, the 10 minutes. It can be something else. It can be a pattern. It can be many things. Anything that is that you are confident and you have validated that is a good indicator of a reversal. And what I do is, of course, I'm looking for that break of structure and prices to do something similar to this. And to me, right now, this is the structure, right? This is considered the head so far. That would be the left shoulder, right? So I'm looking for price to break this and then come back for somewhere that makes sense to me, for that way out. And maybe this is going to go much lower. If it does that, I move the structure, accordingly, right? So I keep on, if I were to trade this, I keep on stalking, if you will, in a good manner, in a positive sense, stalking the price, to see if it is giving me the signs that it is switching, right? Because it's not going to go up, right? We want to buy this, so it's not going to go up unless it breaks structure. It needs to break structure. There's no way around it. It cannot go from this price to anything higher if it just continues with a downtrend and making lower lows and lower highs. That's clear to us. So it needs to confirm some way, somehow, when it does, the trick is to catch, a good, or identify a good area where to enter, and wait for that confirmation, and then get in and let the odds work their thing.
Yeah. Yeah, you're right
Hamed.
about that. You mean you're right about the fact that we want to be buying that, and we want to see confirmation of price moving higher, and obviously that's never going to happen if price is going sideways. So yeah, I mean, if we're looking at the 1 minute, the structure that you're seeing right here, that would be, if I would be applying the 1 minute to my trading, I think that's the structure that I want to see as well. Yeah, let's see what we get here on. Let's see if the news could potentially be a catalyst here for a move higher. I don't even know what the
And
news
this
is.
news is, it's the consumer
CB consumer.
confidence.
Yeah. Okay.
What I want to say is that, let's see, this is yeah, the same thing as with the trend is time frame specific. The same goes with break of structure, is also time frame specific. On the one, you can break 1 minute structure without breaking the 5 minute, and you can already assume, or you could see where I'm going to, that breaking the 1 minute isn't such a great signal, because there will be a lot of false signals, and breaking a 5 minute structure is much more significant. However, the more confidence the more certainty you want, the more you have to wait, and the less it will decrease your risk reward. So it's a balance that needs to be struck between more confirmation, but by the time you get more confirmation, you get in at a later time at a worse price. So it's a delicate balance that needs to be found for each trading strategy, and that is something universal. Doesn't matter what your strategy is. The more certainty you want, the more you need to wait for more things to happen, and it's likely that you're not going to get that very tight entry that gives you those big profits. But there was something about Hamed. One question here, asking us about the free trade copier that I use. It is called FX Blue. It's a you can Google it, of course. It's called FX Blue personal trade copier. It's free. It's been free forever, and I've used it for so long, and it's great. It's great at copying trades. Of course, you do need to have the both terminals to be on at the same time. So it has a little bit of limitation, but I'm sure, I mean, if you have a system profitable, then you can either have your computer on the whole time, or you can get something like a VPS that is on 24/7, and it's not an issue. So and you can connect as many accounts as you want, or as the system allows, like your hardware allows. So it's a great tool. All right, let's go to the 1 minute on. So now we have the market doing what we breaking structure. Right, so you can consider this to be the left shoulder, the head. It's only a 1 minute break of structure, right? So don't get your hopes high yet. It is a break of structure, so maybe that's enough for someone to take it. If I were to take this, then I would go in from the head to the highest point and try to find an area of value, and that would be based on this 1 minute, which isn't as significant as other time frames, but the 1 minute, considering there is news coming up. The news is dollar though, not euro, so you are allowed to trade this pair if you are on a high stick account. Let's see, that's the only area that I see. So if I want to, it depends on the type of entry you want to get in, right? You can just enter here and have the whole structure as the stop, which is fine. But I prefer to have my tight entries, something like that. If I can, you can see it's only about 5 pips and target, and I would go to the higher time frames, target perhaps this order block on the 1 hour. If I'm going to the H4, I will be targeting, there isn't anything here, so I'll be targeting that high or something in that high. And if we even go to the higher time frames, I think we mentioned this before, we could even target this daily order block here, right? If I don't have a daily setup here, so I wouldn't be taking the let me see, would I? Actually, there may be a bigger quasi here. There may be a huge setup here. I wasn't checking this, since this is not a setup that I was looking for. Let's look at the news. Already came out, right?
Yeah.
And the market did not move by a lot, and that doesn't surprise us, since it's the dollar. How did the dollar move from the news? Do we have any information
We
on
didn't
that?
really have any major moves. I mean, I guess it's see, it's pretty much a non-event, I would say.
Yeah, okay, so we have this one, and look at this. Ooh, this looks very, very beautiful. Ooh, I would be definitely taking this as a daily.
We do see some risk off signs here, with the consumer confidence being lower than expected.
Yeah, we actually have a daily setup here. So believe it or not, if I were to trade this, if I were to get a daily from this area, and it confirms, and I can upgrade this trade to a bigger one, I can actually target that high or something in this area, even with the tight stop loss of a few pips. And that is how I get those memorable trades in. This is 18 pips, but you can imagine if you can get something similar to this. This is exactly the trades that I love to wait for. I'm very patient to get these trades. They don't come often, and they have a very low win rate, of course. Don't think that whenever you take this, it's going to hit. But it doesn't have to hit many times for you to understand it. This is so powerful if you know what you're doing. All right.
All right, guys. I think we're coming close to the end of the live stream here. We got the news out of the way. We do see that Euro AD did print some sort of bottom formation on the lower time frames. Let's see if that's the actual low or not. I also see that CHFJPY had a move to the downside, but all in all, no major movements from this news event. We are seeing some slight risk off moves, but it's not. I wouldn't say that it's nothing to worry about. All right, guys, that's it for today. Thank you all for joining here today, and we will see you tomorrow. We got Anastasia coming on, and probably a few more giveaways as well. So make sure you come on tomorrow, and if you have not hit that like already, do so, and remember to subscribe to the channel.
Yes, we have one little question here from Luciano. Yes, your price will be in. It will be as hub credits, right, Jonathan? It will be.
Yeah, exactly.
Yeah, it will be in. You will see the on your upper right corner. You will see the hub credits. And once you receive it, it will be visible. So, but that's it. Thank you guys for being with us, and we hope you enjoyed it as much as we did. We see you guys tomorrow. Take care.
Take care.
Bye-bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at the